I'm about to share a straightforward trading strategy with you, but the real key to unlocking its potential is your ability to stay focused and follow the plan. Hey everyone, and welcome back to the TradeGenius. So glad you're here. We're all about finding those simple yet profitable trading strategies, right? The kind that actually work without needing a PhD in finance. That's exactly what we're diving into today. So stick with me. Alright, so the key part of this strategy is a really helpful indicator. It's called the pullback trading tool, and you can find it super easily on TradingView. Just head over to the indicator section and type in the search bar. And boom, there it is. Add it to your chart and you're halfway there. Okay, so this pullback trading tool we're talking about is pretty slick. It's like a multi-tool for traders because it combines a bunch of different indicators that would normally use separately to analyze trends, pullbacks, swings, even reversals, all in one convenient package. Think of it like as your one-stop shop for market analysis. Instead of juggling multiple charts and indicators, it's all right there. But this is important. Before we jump in and start using it to try and make some profitable trades, we need to do a little bit of fine-tuning. Think of it like this. If you're a musician, you wouldn't just grab your instrument and start playing without tuning it first, right? Same goes for trading tools. A little bit of tweaking can make a big difference in how effectively it performs. So let's dive into the setting and customize this thing to perfectly match our pullback trading strategy. First, open up the indicator settings window. You should see a few tabs, and we're going to start with the inputs tab. In there, we'll find a couple of settings called pivot length left hand side and pivot length right hand side. These controls how the indicator identifies potential turning points in the market. We're going to change both of those values to 7. Just type in the 7 number. Got it? Good. Next, still in the Inputs tab, make sure you enable SRR level extension. SRR stands for support and resistance. This setting will help us visualize those key levels on the chart, which are super important for pullback trading. Trust me, this will come in handy later. Alright, now let's hop on over to the Style tab. Here's where we can adjust the visual appearance of the indicator. You'll see options for Fast MA, Slow MA, and Ribbon Fill. MA stands for Moving Average, and while these can be helpful in some contexts, we're going to disable all 3 of them for this particular strategy. Just uncheck the boxes next to each one. And that's it. Seriously, that's all the tweaking we need to do. We have now optimized the pullback trading tool, especially for our pullback trading strategy. It's like we've perfectly tuned our instrument and now we're ready to play. Okay, so we've got our pullback tool all set up, and now we're adding another piece of this powerful strategy, the volume flow indicator. This is what's going to help us confirm our trades and make sure we're getting in at the right time. Think of it as the final check before we pull the trigger. Just like before, head back to the indicator section on TradingView. This time, search for volume flow indicator. Make sure you grab the one created by Lazy Bear. That's the one we want. Add it to your chart. Now, before we start using this as our confirmation tool, we need to make a few quick adjustments to its settings. We're going to customize it so it works perfectly with our overall strategy. So open up the VFI indicator settings window. First, go to the Inputs tab and we'll see a setting called VFI length. Change that value to 120. That's the only change we need to make in the Inputs tab. So let's move on to the Style tab. Here, we'll adjust how the indicator looks on our chart. We'll see a few options: plot, EMA, and VFI. We're going to disable the second plot and EMA and VFI options. Just uncheck those boxes. Next, change the VFI option itself to columns. This will make the indicator easier to visualize on our chart. Finally, let's change the color of the columns to something that stands out, something you can easily see at a glance. Choose a color that works well for you. And that's it. With this few tweaks, our volume flow indicator is ready to go. It's now perfectly calibrated to help us confirm our trades. And now for the $1,000,000 question. How do we actually use this strategy to make some money? It's simpler than you might think. We're going to break it down into easy to follow steps. First things first, we need to figure out the overall trend direction. This is crucial. If we're looking to go long, meaning we think the price is going to go up, then the trend needs to be upwards. Conversely, if we're thinking about a short trade, believing the price will fall, the trend should be downwards. Makes sense, right? We want to trade with the trend, not against it. Now, let's say we're looking at a potential long trade. Our next clue is price action. We need to see the price candles close above a resistance level or a recent swing high. Think of resistance levels as ceiling that the price has a struggle to break through. When it finally does, that's a good sign. This break above the swing high is our first signal that something interesting might be happening. The candle that closes above the swing high line becomes our potential buy signal candle. But we're not jumping in just yet. We need confirmation. Remember that volume flow indicator we set up? This is where it comes in. For a long trade, we need to see VFI histogram bar above the zero level. This confirms that there's actual volume supporting the price move. It's like the market saying yes, the move is for real. So to recap, for a long trade, uptrend, price close above the resistance or swing high, and the VFI histogram is above zero. And if all three of those conditions are met, then we have a valid buy signal. Now what about stop loss and take profit? These are essential for managing risk. For a long trade, we can set our stop loss, the point where we automatically exit the trade to limit losses at a recent swing low. And for our take profit, where we lock in our gains, we can aim for a target that's 1.5 times the risk we're taking. So if our stop loss is say $10 away from our entry price, our take profit would be $15 above our entry price. The same principle applies to sell trades, but in reverse. We need a downtrend, a bearish breakout below support level or swing low, and negative VFI histogram bar below zero. The stop loss and take profit are calculated in the same way, just on the opposite side of the trade. Easy, right? With these simple rules and our confirmation indicator, we've got a solid framework for making profitable trades.